This is Eric Brotman, the host of Don't Retire, Graduate, the podcast that teaches you how to advance into retirement rather than retreating. Welcome to Office Hours, where we answer listeners' questions about personal finance, retirement readiness, and more. We received a question from Mark, who asked, if you won the lottery and had the option of $30 million up front or $1 million a year for 30 years, which is actually the better option? And Mark, you ask a great question that people who win the lottery are confronted with. And the truth is, most of the time, it wouldn't be $30 million up front or $1 million a year for 30 years. It would be some reduced amount up front or $1 million a year for 30 years because of the time value of money. So if you had the choice of $30 million today or $30 million over 30 years, you would always take the $30 million today. And the reason you would always do that is that the value of a dollar, just because of inflation, will be lower in 2 years and 4 years and 6 years, and a whole lot lower in 29 years when you got that last check. So if it was 30 million today or $1 million for 30 years, you would definitely take the 30 million up front. But let's say it was 20 million up front or $1 million a year for 30 years. Now you're in a different spot. Now you have to actually do a calculation, and what you're really solving for is called the net present value of that income stream. And that you can find this online. You can find calculators in your software and so forth. But really what you're trying to do is, based on an inflation rate, you're trying to figure out which of these is more valuable, 20 million today or $1 million a year for 30 years. Because nominally, yes, that's $30 million. It sounds like more. But the way the value of a dollar erodes, I don't know how old a guy you are, Mark, but your grandparents probably paid for their house what you're going to pay for your next car. And so as a result, we have to look at dollars very differently if they're in 2022 or 2051, for example. So when you calculate this, you're calculating the present value or the net present value of a stream of payments. And all of this is going to be based on assumptions. If inflation's very low, the stream of payments is going to look great. And if inflation's high, then the lump sum's going to look great. And you don't always know what it's going to be. So I think you have to use a reasonable assumption. Well, for the last 20 years, that reasonable assumption was somewhere around 2.4%, which is no big deal. But right now, as I record this in the spring of 22, inflation is currently north of 8%. Which means under no circumstances would you want to take $1 million a year if it's going to erode that quickly. Money would be cut in half. A dollar would be cut in half every 9 years if it stayed at 8% inflation. So you would never want to do that. So the short answer is you got to do some math. You may want to use your accountant or your financial advisor or at least an online resource to figure this out. I feel compelled, since you asked about the lottery, to also talk about the lottery in a different way, which isn't just how much money are we talking about, but also what actually happens to lottery winners. First, it's important to know that because lottery winnings are taxable, and because this pushes you into the ultimately highest tax bracket you could ever be in, close to half of it goes to the government anyway. So by the time you have that half remaining that's actually net, now you have to figure out what to do with it. And unfortunately, winning the lottery, particularly a big number like you described, winning the lottery does not, in most cases, create more happiness for people. In fact, it can create a very depressing situation. And I know that sounds counterintuitive, but it brings into question people's relationships with you. If you're suddenly worth $30 million and your friends are struggling because they need 4 tires or they need a washer and dryer or your family's having troubles or whatever, there will be people with their hand out in a very different way. And while you're going to want to help, presuming you're a good human and a good steward and a good member of society, you're going to want to help in various ways. But it does mean that you run the risk of having sort of that entourage Klingon type of situation where you don't know if people are spending time with you because you're picking up the bar tab or they're spending time with you because they genuinely enjoy you and care about you. So it creates some real problems. You'll notice that a lot of lottery winners decide to stay anonymous. And that's why. They may not want people to know that they've come into sudden wealth. Last thing I'll say about the lottery, Mark, is that for people who do win, and of course, winning is an infinitesimal shot. I mean, you're more likely to be hit by lightning twice in the same day than you are to win the lottery in most cases. But assuming you're that one who wins, most people don't have any way to deal with sudden wealth. And so whether it's a lottery or whether it's inheritance or whether it's a public company, a stock goes public and you had options or whatever it is, when you come into sudden wealth, it can be extremely overwhelming. And it's a really good time to make sure that you have the right advisors, the right tax advisors, the right legal advisors, the right financial advisors, because your instincts may very well not lead you down the right path. And unfortunately, people who are wealthy for their whole lives or their whole adult lives learn to cope with, understand, manage, and handle all of these various things, whereas folks with sudden wealth often wind up making some horrendous decisions and sometimes wind up bankrupt, which seems impossible. It seems like, how could you even spend that much money? But people do. So, Mark, I hope I've answered your question. I think I've answered it a couple different ways. I would also tell you not to play the lottery, because you're better off doing a lot of other things with your money. But if you must play, may you win. I'll be happy for you. Mark, thanks for your question. If you'd like to send us a question which we might answer in a future episode of Office Hours, post it on our Facebook page or tweet us at Brotman Planning. If you like what you hear, please subscribe to our podcast and leave a rating on Spotify or wherever you listen to your favorite shows. Please also check out our books, workbooks, and online financial literacy resources at brotmanmedia.com. Thanks for coming to Office Hours. Be sure to tune in for new content every Thursday. For now, this is your host, Eric Brotman, reminding you, don't retire, graduate.
Securities offered through Kestra Investment Services, LLC. Kestra IS. Member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC. Kestra AS. An affiliate of Kestra IS. Kestra IS or Kestra AS are not affiliated with Brotman Financial or any other entity discussed.